An assumable loan, there are some huge advantages potentially to the buyer and the seller. Let me just give you an example. Let's just say that in today's market climate, interest rates are at 8%, and I'm a seller. But I took out an assumable mortgage on my home 5 years ago at 5%. I can actually market, as the seller of that property, to potential buyers that you can take over my assumable loan and get a 5% interest rate.
They also would assume the balance of that mortgage, meaning that if their term is shorter, more money will go towards the principal of that loan. Also, if the difference between the loan balance and the sales price is very minimal, their down payment requirement would be less, and then closing costs are much less on a closing on an assumable loan than they are on a new loan.
An assumable mortgage is this. We're seeing a lot of this in today's climate. First-time home buyer needs to have their parents co-sign on that mortgage to help them get into that home. Now, we make sure that they can afford that home on their own, but there are some reasons, which I won't get into, that a parent might co-sign. An assumable mortgage, FHA or VA, the buyer, once they qualify on their own, can assume their parents off of that mortgage. It's very appealing to parents who are co-signing for their children because they're not on the loan forever. They're on it for a period of time until that person can assume it away from, or their child can assume it away from them.
The number one reason I would assume is because there's a rate there that I can't get at today's rates. That's going to be the number one reason for the buyer. For the seller, the advantages are I differentiate in this marketplace. I now have a house like everyone else's with a rate of 4 3/4 when everyone else is, well, they have to go with whatever going market rates are. So I differentiate. It's a way of moving my house much quicker than some of the neighbors around me.